Bless Squad, what's going on with y'all, man? It's your boy, Blessed Episode to the Bless Show with another video here on Blessed to Invest. And today we're here to talk about the impending recession. We're going to look at a couple of charts here of the overall market, and I'm going to give you a couple of tips about 6 ideas how to prepare for this recession, this 2022 recession. Everybody's talking about inflation is going crazy. As you can see, the market looks horrible. 401ks are going down. Gas prices are going up. It's terrible out here. Horrible. So before we get into it, though, hit the like button. We're all trying to. One thing we want to see go up is the like button. So make sure you spam the like button. Inflation down, like button up. So let's get into it. So this chart. This is the overall market. This is the S&P 500. If you're not familiar with it, it's just the top 500 companies in the stock market, in the U.S. market. So it tracks the overall of the top 500. And right now, it's been down off the high of 479, and it's hovering around 411 right now. It had a low of 380, but it's hovering around this 411 area. As you can see here, we've had what I expect for this. It's not very strong. You can see how it pushed up a little bit, but it's just tagging some older support levels the same way it's done before previously. But with the news that is impending to come out in the next couple of weeks with the inflation numbers and the consumer report numbers, we just had a report with Target, how they are struggling to sell some of their products. We're having a lot of issues supply wise. That is probably going to continue to push this market further down. And I expect this thing to continue to push down below 380 over the next couple weeks or so. But we will see. Nothing is a guarantee. But just based on how all the news is coming out, it does not look good for this market right now. And I'm expecting to see 370s, potentially 360s. Really, honestly, I want to buy around 350. If we can get 350, I think that's going to be a golden level where you can really aggressively buy, start to add to some of your positions and stuff like that, and really get some good bargains for these stocks. So this is an exciting time, great opportunity. You should not be nervous with this. This is just an opportunity to buy things at a discount. So with this recession, with all these gas prices going up, cost of living going up, rent hitting $2,000 on average, everything is just going up. What can we do to prepare ourselves for the impending recession? The first thing I recommend y'all do, taking it from the stock and real estate perspective, is look at your investments. Look at exactly what you have in your portfolio. A lot of these high-flying names that have done well over the last couple years, the GameStops of the world, the AMCs, a lot of these growth stocks that were using a lot of debt and leverage to grow their company and raise their stock price are probably not going to do well in this type of environment. You're going to need more stocks that have been around a long time, that are wholesome companies, that are more value-oriented companies other than growth companies. Stocks that pay quality dividends, stocks that have products that they can sell during a recession that people are going to need. People are always going to need food. People are always going to need shelter. People are going to continue to need gas, no matter how much we complain about it. Focus on those essential things that everybody needs. Energy is another thing people are going to need. So focus around those household goods, household names that everybody has to buy, whether it's a recession or not. Focus on that stuff, and focus on quality names that don't have a lot of debt on their balance sheet. And look at your overall portfolio and start to rebalance it and say, okay, do I need to get out of this name because it's just I've taken enough money out of it. It's a growth stock and it's probably not going to do well in the future. Just really focus on that. On top of that, I also believe sitting in cash really heavy right now. Really, if you're in a lot of these stocks, some stocks are going up right now. There are companies out there. For example, one stock that I'm in, Caterpillar, has been really strong during this recession. There are stocks out there, whenever this thing decides to load, there are stocks out there that have held up very well during this bear market period. But really, honestly, you want to sit heavy in cash so you can take a position in these strong names. Maybe you can get a good bounce on Amazon. Amazon's down really bad. Apple's down really bad. These are companies that are going to be around for a very long time. I don't expect Amazon or Apple to go anywhere. Take advantage of these discounts. Sit in some cash. Wait for the trend to reverse. And when you have 50, 60, 100 grand saved up, then you can load up on these shares at 50% off. And that gets you in a great spot for the next 10, 20 years. So you're paying a 50% price for the stock. You're getting amazing dividends, and then you can see some growth as time goes on. So this is a beautiful time. It's not a once in a lifetime opportunity, but it's a once in every 5, 10 years. And really, we haven't seen this opportunity really since the pandemic, and then before that, since 2008. So we don't get these every year. These are not common occurrences where you can buy stocks at prices like this. So definitely take advantage of this and sit on cash. Next thing I recommend is creating a budget. Budgeting is going to be very important, especially in a time like this where food is going up, energy costs is going up. So learning to stick within the budget. Maybe you have to cut out your weekly dinners or something like that. Maybe you have to cut out your vacations. Make sure you're sticking within the budget and you're not blowing your budget on frivolous things during this time where you need to be saving more money and preparing for the next opportunity. On top of that, if you can increase your income, this is a great time to do that. People are going to be, as you've seen, like Target, and what's the other company? Elon Musk, I can't think of the name. Tesla. There we go. Tesla has been laying off their employees. So this is an opportunity to find jobs and skills where you can do outside of a job. Maybe you have some type of painting skill. Maybe you can dog sit a little bit. Maybe you can do a little Uber on the side, something like that, where you can make some money outside of a job. And that's going to be really critical to put you ahead of everyone else. On top of that, build your resume up, build some skills. If you have let's say you have a technology background and you're in the IT area, learn to take some more classes, build some more skills, add that to your resume. So people can look at you and say, oh, you're a valuable employee. And one, that would lessen the chance that you get fired, one. And two, it makes you more marketable for other employers if you were to get fired. Put yourself in a position where you're lowering the risk of getting fired, and also put yourself in a position where you're increasing the odds that you can make more money. So it's a balance between the two. Build your skills, increase your income, and you should be good during this time. And also with these jobs, make sure you're at an employer. Analyze your employer. How is your employer doing? Is the stock market, is your employer down bad? Are you at Target right now and they're saying they're cutting prices of things and laying off employees? Understand where you are employer wise. So keep track of that. That's something very important. And if you are in one of those companies, start looking potentially for something else, to have some type of side income available, have some savings set aside, or just have a backup plan if it were to go south. All this is about proper planning and getting yourself set up long term. Next, the third thing I want to say is start paying off your debts. This is a weird time to be in the market because inflation is high, so it makes debt repayment a lot easier, but you still don't want to be in a lot of bad debt. So if you have a rental property right now, it's going to be easier to pay off your debt because you can increase rents, and rents are going up, and it makes it easier to pay off your mortgage. But if you're in credit card debt and you have a lot of consumer debt where it's just clothing and stuff that you're not making money on, it gets a little bit more difficult to hold on to that debt. So make sure you're in good debt and make sure you're paying off the debt that you have that is not in a good space right now. So that's going to be very important. Paying off your debt, managing your debt, because you don't know how these next 12 months, 18 months are going to really turn out. You just want to be properly prepared for that. So keep that in mind. So let's look at Target. Target was really bad. As you can see, this thing has been down terrible. They had some news that came out that they were not able to sell a lot of their big ticket items. So they're going to decrease the price of these big ticket items, and most likely they're going to reduce how much inventory they have in the future because they just have not been selling. And what that means is people are running out of money. If you're not able to afford $1,000 TV, why would they keep it on the shelves anymore? Instead of having 10 of them in the back, they might have 1 or 2 in the back now. So they're probably going to decrease the price and then probably increase them back even higher. That's probably what's going to happen, and try to recoup their profits. I can definitely see that. But a lot of different companies are doing that now. They're really trying to just recoup profits and not lose too badly in inflation. So it'd be great to get in a company like this. Target isn't going anywhere. Once Target dips down, maybe another leg down around $100, this might be a good buying opportunity, to be honest. They pay some pretty good dividends, and Target's going to turn around. They have a lot of product on hand. They're going to be fine. So this is one stock that I think is going to look really good in the next 10 years after this massive dip comes into play. But last but not least, the thing I want you to keep track of is just plan for the long term. This is not going to be a short game. It's going to be slight pain for a little bit, but in the end, a couple years from now, you're going to look back at this and say, I'm happy I planned for this long term and set myself up in the long term. So what I want you to do in that situation is plan what you want to do, what you want to buy when the market goes down, whether that's real estate, whether that's stocks, whether that's an online business you want to do, whatever. Just plan how you want to budget your money, plan how you want to set up your portfolio for the next 5-10 years, and just analyze, look at what's going on. And you're going to be in a really good spot. So I'm really happy for this opportunity. I know a lot of people are nervous right now with inflation going really high, consumer prices going really high. But honestly, from an investor standpoint, this is probably one of the greatest opportunities we can look at. This is how millionaires are made, as Warren Buffett would always say. So be ready. I'm excited. Hopefully you are excited, and hopefully you take these tips to prepare for this impending recession as we enter the recession of 2022. So as I wrap it up, make sure you spam the like button and also sub down below for more content like this. And also let me know what else are you doing to get prepared for this recession. I'd like to know in the comment section down below. And it's me, your boy, Blessed Applesauce. Stay blessed, and I'll see y'all in the next one.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.